Hello, welcome to my YouTube channel. In today's video we will be discussing about unleashing the potential, growth investing strategies for maximum returns. Investing in the stock market can be a daunting task, but with the right strategies, it can be a great way to grow your wealth. Growth investing is a popular strategy that involves investing in companies with high growth potential. These companies typically reinvest their profits back into the business, which can result in high returns for investors. But how do you identify these companies and choose the right ones to invest in? In this video, we'll explore the different growth investing strategies that can help you maximize your returns. From identifying growth stocks to diversifying your portfolio, we'll provide you with the tools and knowledge you need to unleash the potential of growth investing. Whether you're new to investing or an experienced investor, this video will help you take your investment portfolio to the next level. In the world of investment, where opportunities abound, growth investing has emerged as a dynamic strategy for maximizing returns. With its focus on capitalizing on companies that show strong potential for rapid expansion and increased market value, growth investing has captured the attention of both seasoned investors and those new to the game. But what exactly is growth investing? At its core, growth investing involves identifying companies that are poised for substantial growth in the near future. These companies typically exhibit strong fundamentals, such as a solid business model, innovative products or services, and a competitive advantage in their respective industries. The allure of growth investing lies in its potential for significant returns. By targeting companies that are experiencing rapid growth, investors have the opportunity to ride the wave of success and achieve impressive gains. However, it's important to note that growth investing is not without its risks. Investing in fast-growing companies can be volatile, as market conditions, competition, and other factors can impact their growth trajectory. Despite the inherent risks, growth investing has proven to be a lucrative strategy for those willing to do their due diligence. By carefully analyzing financial statements, evaluating industry trends, and conducting thorough research, investors can identify companies with the potential to deliver substantial returns over the long term. In this video, we will delve deeper into the world of growth investing, exploring various strategies and techniques that can help unlock the potential for maximum returns. Whether you're a seasoned investor looking to fine-tune your approach or a novice eager to learn the ropes, this comprehensive guide will equip you with the knowledge and tools to make informed investment decisions. So buckle up and get ready to unleash the potential of growth investing as we embark on this exciting journey together. The road ahead is filled with opportunities, and with the right strategies in place, you can tap into the power of growth investing and reap the rewards it has to offer. What is growth investing and how does it differ from other investment strategies? The key distinction of growth investing lies in its emphasis on future potential rather than present value. While value investors seek undervalued stocks or assets, growth investors prioritize identifying companies that show strong signs of expansion, such as rapid sales growth, increasing market share, or disruptive innovation. Growth investing involves identifying companies in sectors that are experiencing or poised for substantial growth, such as technology, healthcare, or renewable energy. The goal is to identify companies that have unique products or services, a strong competitive advantage, and a solid business model that can sustain their growth trajectory. Investors practicing growth investing often focus on factors like revenue growth rates, earnings growth potential, and the company's ability to reinvest profits for further expansion. They look for companies with a track record of consistent growth or those that demonstrate the potential to disrupt existing markets. One of the main benefits of growth investing is the potential for higher returns. When successful, investing in companies with significant growth prospects can lead to exponential gains over time. However, growth investing also carries higher risks compared to other strategies due to the uncertainties associated with future growth and market volatility. The benefits of growth investing for maximum returns. One of the key benefits of growth investing is the opportunity to achieve maximum returns. By targeting companies that are in their growth phase, investors can benefit from capital appreciation as the company's value increases over time. These companies often exhibit strong sales and earnings growth, which can translate into higher stock prices. Additionally, growth investing allows investors to be part of exciting and innovative industries. Companies in sectors such as technology, healthcare, and renewable energy are often at the forefront of innovation, which can lead to exponential growth. By investing in these companies, investors not only have the chance to earn attractive returns but also contribute to advancements that can shape the future. Another advantage of growth investing is the potential for compounding returns. When investors reinvest their profits back into these high-growth companies, they can benefit from compounding growth over time. As the company continues to expand and generate higher profits, the value of the investment can multiply exponentially. Furthermore, growth investing can provide diversification benefits to an investment portfolio. By including growth stocks alongside other investment types, such as value stocks or income-generating assets, investors can mitigate risk and potentially enhance overall returns. This diversification helps to spread risk across different sectors and asset classes, reducing the impact of any single investment's performance. In summary, growth investing offers several benefits for investors seeking maximum returns. The potential for capital appreciation, exposure to innovative industries, compounding returns, and portfolio diversification all make growth investing an attractive strategy. However, it is important to carefully research and analyze companies before investing to ensure their growth potential aligns with your investment objectives and risk tolerance. Identifying growth stocks, key characteristics to look for. Identifying growth stocks is essential for investors looking to maximize their returns. These stocks have the potential to outperform the market and generate significant capital appreciation over time. However, not all stocks are created equal, and it is crucial to identify key characteristics that indicate a company's growth potential. One important characteristic to consider is the company's revenue growth. Look for companies that consistently demonstrate strong revenue growth year over year. This indicates that the company is gaining market share, expanding its customer base, and potentially introducing new products or services that resonate with consumers. Another crucial factor to assess is the company's competitive advantage or moat. A strong competitive advantage can protect a company from competitors and allow it to maintain its market share or even expand it. Look for companies with unique intellectual property, strong brand recognition, or a dominant market position. Additionally, evaluating a company's management team is vital when identifying growth stocks. A competent and visionary management team can drive innovation, execute growth strategies effectively, and adapt to changes in the market. Research the track record of the company's management team and assess their ability to navigate challenges and capitalize on opportunities. Furthermore, consider the industry or sector in which the company operates. Look for sectors experiencing favorable macroeconomic trends or disruptive innovations that can propel growth. Investing in companies positioned in high-growth industries can provide additional tailwinds for their stock performance. Lastly, keep an eye on the company's financial health and profitability. While growth stocks may prioritize reinvesting profits back into the business for expansion, it is essential to evaluate their ability to generate sustainable profitability in the long run. Monitoring and adjusting your growth portfolio. Once you have built a growth portfolio, it's crucial to continuously monitor and adjust it to ensure maximum returns. The market is ever changing, and what may have been a high-growth stock yesterday may not be performing as well today. Therefore, staying on top of your investments is essential. Regularly reviewing your portfolio allows you to identify underperforming stocks and take appropriate action. This could involve selling off positions that are not meeting your growth expectations or reallocating funds to better performing assets. By staying vigilant and proactive, you can ensure that your portfolio remains aligned with your investment goals. In addition to monitoring individual stocks, it's also important to keep an eye on broader market trends and economic indicators. This will help you identify potential risks and opportunities that could impact your portfolio's growth. Stay informed about industry news, earnings reports, and macroeconomic factors that may influence the performance of your investments. Moreover, it's essential to have a clear plan in place for adjusting your portfolio. This could involve setting specific criteria for when to sell or buy certain stocks, establishing target price levels, or implementing stop-loss orders to protect against potential losses. Having a well-defined strategy will help you make informed decisions and avoid emotional reactions to market fluctuations. Finally, consider seeking professional advice or using advanced analytics tools to assist you in monitoring and adjusting your growth portfolio. Financial advisors or investment platforms can provide valuable insights and help you navigate the complexities of the market. They can offer guidance based on their expertise and help you optimize your investment strategy for maximum returns. We hope you found our video on growth investing strategies for maximum returns to be informative and helpful. Investing can be a daunting task, but with the right strategies, you can unleash the potential of your investments and achieve significant returns. By focusing on growth stocks, diversifying your portfolio, and staying informed about market trends, you can set yourself up for success in the world of investing. Remember, investing is a long-term game, so be patient and stay committed to your strategy. Best of luck on your journey to maximum returns. Thanks for watching my video. Don't forget to like my video, comment and subscribe to my YouTube channel, and also don't forget to turn on the notification button for more videos.